For years, the conversation around Bitcoin was the same. Is it real? And does it belong in a portfolio? While others debated, Coinshares got to work. In 2015, they launched the world's first Bitcoin ETP, regulated, listed, and built for institutional investors. Long before the U.S. market caught up. Today, they manage over $6 billion in assets and have remained profitable through every market cycle, including the 2022 downturn. What sets them apart? They're not a crypto exchange chasing trading fees, not a company betting its balance sheet on Bitcoin, not a mining operation. Coinshares is an asset manager with recurring fees, a fixed cost base, and a business model you can actually model. Now listed on NASDAQ under ticker CSHR. Learn more at coinsharesipo.com.
The thing about AI for business, it may not automatically fit the way your business works. At IBM, we've seen this firsthand. But by embedding AI across HR, IT, and procurement processes, we've reduced costs by millions, slashed repetitive tasks, and freed thousands of hours for strategic work. Now we're helping companies get smarter by putting AI where it actually pays off, deep in the work that moves the business. Let's create smarter business. IBM.
You need to make a huge presentation in an hour. Adobe Acrobat uses AI to take all your documents and generate a presentation with a single click. Build slides quickly and streamline the process. Need a last-minute pitch deck? Do that with Acrobat. Need to level up your presentation design? Do that with Acrobat. You have 30-plus documents that need to be simplified into a proposal. Do that. Do that. Do that with Acrobat. Learn more at adobe.com/do that with Acrobat.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Yeah, let's go right to Tesla. It just crossed the Bloomberg terminal. First quarter adjusted EPS, folks, 41 cents a share, 7 cents better than what the street was expecting. That's adjusted EPS. First quarter gross margin coming in stronger than forecast, certainly a sign of profitability, 21.1% versus an estimate of 17.7%. First quarter revenue coming in slightly higher than what the street was forecasting, Tim, $22.39 billion. The street estimate was for $22.19 billion.
Okay, so some other headlines crossing the Bloomberg terminal. You mentioned free cash flow, but worth repeating because it is a redhead, Carol. First quarter free cash flow, $1.44 billion. The estimate was for a negative $1.86 billion. The Tesla communications around earnings are a slide deck, so it's kind of tough to go through. But Tesla says that the Cybercab, the Tesla Semi, the mega cap production starting in 2026, so that's this year. Tesla also saying the first gen production lines for Optimus, that's the humanoid robot, are being installed. Tesla also saying that Cybercab and the Tesla Semi are on schedule for 2026. The company says seeing its rebounds in demand for EMEA and North America. And we should note that the company also says that tailwinds are persisting for the U.S. autos business, and it received approval for full self-driving in the Netherlands in April.
All right. The stock, as you see, though, investors liking what it has to say about the first quarter in terms of a lot of those metrics actually looking better than forecast. And again, looking at some of the individual businesses, the company also saying it launched unsupervised robotaxi rides in Dallas and Houston. As you mentioned, tailwinds persisting for the autos business, first gen production lines for Optimus being installed. So much of the Tesla story is about what it's going to be done. It's classic vintage, if you will, at this point, Elon Musk. And we know we've talked a lot. We're anticipating the SpaceX IPO. Speculation, does everything get rolled into one company under the Tesla umbrella, whether it's the AI business, and how does everything work together? And that is certainly something we're watching and we'll be watching out for on the call today.
Yeah, on that, the question is about what the identity of this company is. Investors are not and have not for years valued it as a car company. Many people who are bullish on the company say it's about AI, it's about autonomy, it's about creating that fleet of robo-taxis. You mentioned that it launched unsupervised robo-taxi rides in Dallas and Houston. The company also saying that robo-taxi miles about doubled sequentially. That's a measurement that Waymo uses as well to indicate the scale.
Usage or testing or a little bit of both.
Exactly. Well, this is usage, right?
Yeah.
But not everywhere. And the rollout is not as far and wide as it is for Waymo.
Dana Hull on our live blog, senior reporter here at Bloomberg, has been covering Tesla. She's saying Tesla's saying high up in the deck that demand has returned. Here's the quote. We saw continued growth in demand for our vehicles in markets in APAC and South America, while also seeing a rebound of demand in both the emerging markets and also in Africa and in North America.
Okay, look at that. Tesla shares higher right now, as we mentioned, just by about 3.4%. First quarter adjusted gross margin, excluding regulatory credits, was 19.2%. That's up from 12.5% year over year. The headlines, though, that are important for our audience: Tesla first quarter adjusted earnings per share coming in above estimates at 41 cents. The estimate was for 34 cents. First quarter free cash flow, $1.44 billion. The estimate was for negative $1.86 billion.
All right, with us is Steve Mann, Global Autos and Industrials Research Manager at Bloomberg Intelligence. He joins us from BI headquarters in Princeton, New Jersey. Steve, come on in. Lots of moving parts, certainly when it comes to Tesla, but it was originally all about the EV business. We can get into other stuff later. How do you think they did in the quarter?
Earnings, like you said, earnings beat, actually not a big surprise, given that production was pretty high in the quarter, and I think positive free cash flow is great versus the negative free cash flow consensus was expecting. That's probably a function of the higher profit for the gross profit for the quarter. I think investors will like this. If I gleam into their investor deck, shareholder deck, they are ramping up the cyber robotaxi business. They have unsupervised ramp up over in 3 different cities, and then San Francisco area, they're actually have it running with a safety driver. So I think that's a good sign. I think that investors are pretty antsy about that. We're including myself. We're waiting and thinking are they how are they doing on this? So I think they're ramping up according to plan. What's also interesting, and we actually wrote about this, is that the rest of the world markets for their auto sales is improving. Rest of the world basically excludes their 3 pillar markets, which is U.S., Europe, and China. So we saw they're actually doubling their footprint in Japan, South Korea sales up. They're starting to get into the India market, huge market potential. So let's hear what they have to say about the robot. I'm not as optimistic on the robot.
Well, Ed Ludlow is here with us. He's going to help us make sense of all of these headlines. He is the co-host of Bloomberg Tech on Bloomberg TV. He follows this company and all EV companies closely. But is it even an EV company anymore, Ed?
This is the no surprises, no drama shareholder deck. So interesting. The return of the word demand about the core EV business is almost a surprise. We spent all week saying we look past the EV business. This is about being an
Optimus.
Yes, being an AI and robotics company. And we talk about how Tesla trades at 183 times forward earnings. The rest of the Mag 7, those are the biggest technology companies by market cap, trade roughly 30 times forward earnings. In other words, this is what we're saying. Investors value this as an AI and robotics company. And yet, the stock is up more than 4.5% in after hours. And what they're talking about is the return of demand in markets like APAC and Latin or South America, and demand in other core markets like EMEA for their electric vehicles.
Is that surprising to you, given that China has been able to create and build and develop EVs that can be bought in some of these markets at a fraction of the price that Teslas can be?
In the absence of any specific commentary about China, I mean, what Tesla says, and I'm just going to read it, is including the rollout of the Model YL, long range or long length, in markets outside of China and more affordable trims of both models. So that's the only real sort of specific way they've addressed China. They're not saying they saw weakness, they're just saying they saw strength outside of China. So I find that very interesting.
Shame on us for not realizing this is still a real business, this EV business.
But they've been trying to communicate to us that that's not the future.
Or shame on them.
Well, I mean, there's so many ways we could go about this. In the shareholder deck, they talk about in passing reference building the biggest ever chip fab. They don't use the word terafab, which I find interesting. The absolutely critical thing for the audience to remember is that any activity relating to Tesla building its own chip factory is not factored into its full financial year capital expenditures guide, which is $20 billion. They haven't changed that in this deck, and unless I missed it, and I can check right now. But to build a chip fab that they're talking about would take in the trillions of dollars. And so one overhang that investors have been worried about, clearly they're not, the stock's up 4.5%, have been, how much money is Tesla going to spend to get all of this done? Like, at some point, they're going to have to put the money where the mouth is to get these projects underway.
Go ahead, Carol.
Yeah, let's bring back Steve Mann, Global Autos and Industrials Research Manager at Bloomberg Intelligence out there in our BI headquarters in Princeton, New Jersey. You've been listening to us talk with Ed, and this kind of idea that, EVs actually still a big deal at Tesla, and they're developing and growing in markets outside the United States.
Yeah, I think you should think of cars from Tesla's perspective as a robot on wheels, right? For them to proliferate AI in cars, and then later on with a humanoid robot, they do need to sell more cars, right? They need to get this FSD approved, and they had some good news recently. At the end of last year, South Korea approved FSD, and more importantly, a few weeks ago, Netherlands approved FSD, and that's critical because that can actually help them proliferate beyond Netherlands into the rest of Europe. So it's a big deal for them. Ed was talking about the Model Y, the lengthened, longer Model Y. It's important to have that vehicle, especially in Asia, because a lot of the households over there are multi-generational households, so they do need a little bit more room, a little bit more seating room for the buyers over there. So that's why you were seeing that that car actually resonates. It has been resonating with the Japanese and as well as South Korean consumers there.
Ed, is this a real business for the company going forward? Are investors betting that the Optimus business will
There's a distinction between going forward and near term, medium term, long term. I mean,
that's the Tesla story, right?
The language is so specific. Preparations for our first large scale Optimus factory will begin shortly.
What does that mean? Putting a shovel in the ground?
Yeah, exactly. Well, we just don't know, and I'm sure that they'll get questions on it in the call. Steve's absolutely right that they did discontinue production of the Model S and X, but they also, for a very long time, Musk himself said they only made that vehicle for sentimental reasons, right? It was so low volume. I find it really interesting that the second part of that paragraph, the first generation line for Optimus, designed for 1 million robots a year, will replace the Model S and Model X lines in Fremont, California. We are also preparing Gigafactory Texas for the second generation line, which is being designed for long-term annual production of 10 million. I think that's a really significant piece of news for the Bay Area and the state of California, that actually just in writing, confirmation that Optimus as a program starts at that Fremont facility.
It's a big deal. I mean, given what Elon has said about California, the moving out of California.
Well, what was it? Was it Gavin Newsom?
Yeah, Newsom said that Elon called him, and this was in Matt Winkler's opinion piece recently, that Elon called him and said, we can't find the talent that we're looking for outside of California.
Yeah, and also, by the way, I'm not saying this is barnstorming breaking news. I'm just making an observation that they've set the plan out in writing. For something that's hard for many people to believe. Steve makes a very critical point. Again, Tesla talked about this. The first use case of Optimus is within Tesla's own facilities in the manufacturing context.
Yeah.
And he's talked about selling it to the general population as a babysitter or as care for the elderly or as part of the labor, to address the deficit in labor in various sectors. But I'm just saying, they outlined a plan. And if you think about the history of this company, the big tent at Fremont that they put together, the Frankenstein's monster of a factory that it once was, it's interesting how they do things.
I also want to bring in Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management.
We're going to roundtable it, and you guys talk to each other, and we're going to talk to you.
The firm has about $4 billion in assets under management. So talk to us a little bit about your first impressions when it comes to these results, this idea of seeing demand in certain parts of the world for the autos business. What's your take?
Thrilled. Couldn't be happier to see demand for the autos business. That's the business I'm in, is EV business. I care about climate. I want to see them sell as many EVs as possible in the world, and they still make the best EVs. And so I like the fact we're talking about cars, I'm so happy because like that's how they actually make money, and that actually matters. Nobody needs another cab service. Okay, there's plenty of cab services. If you're in Santa Monica, you can take a robo-taxi right now. We got Amazon up next. I haven't seen a Tesla yet. I'd love Tesla to come here where it's really hard to drive and test it out. But that said, I'm excited I'm an EV guy. I'm a climate guy. It's Earth Day. I hope they sell as many EVs as possible.
Guys, I'm just going to jump in here. Ross,
Yeah.
Thank you for joining the show. It's not my show. I'm going to ask you to please hold and stand by. You guys forgive me for that one. Something just dawned on me.
What?
So last quarter, they didn't either, but typically in the third page of the deck, they'll give you a financial summary where they put the headwinds and tailwinds to the top and bottom line. And I didn't even realize last quarter, they didn't do it in Q4, and they've not done it this time. So for example, we don't know what the impact of volume changes is, or FX as an example, or any other specifics, what the impact of operating expenses is on profitability. They haven't spelled it out, and I'm just making that observation.
Well, all right. So
I agree with that observation.
So what do you make of that, Ross?
Well, you got to wait for the SEC documents to drop,
Okay.
But I kind of was surprised by the number. So I was trying to parse through why it was better than expected, because with all the excess inventory that they added, should have hit cash flow harder. Yeah. So I'm just, I want to see. Their numbers didn't add up with my numbers, basically, because of the excess inventory, which they now have 27 days of inventory, which is actually a high for them, but yet that didn't hit cash flow at all. So, or maybe it did, because there was 1.4 billion, they say, of free cash flow, but the actual cash that hit the books was 700 million. But I just want to see how these numbers are parsed out.
When you're running a business, the best days are the ones where priorities stay on track. For midsize and large companies, risk can affect multiple parts of the organization at once, from property and liability to cyber and regulatory challenges. At that level, managing risk becomes an ongoing discipline. At The Hartford, the focus is on helping businesses manage risk before it turns into something more disruptive. And when losses do happen, that work is paired with insurance coverage shaped by years of underwriting, risk engineering, and claims experience. Learn more at thehartford.com/risk mitigation. Policies provided by Hartford Fire Insurance Company and its property and casualty affiliates, Hartford, Connecticut.
You ever wonder how far an EV can take you on one charge? Well, most people drive about 40 miles a day, which means you can do all daily stuff no problem. Go to work, grab the kids at school, get the groceries, and still have enough charge to visit your in-laws in the next county. But they don't need to know that. And the best part, you won't have to buy gas at all. The way forward is electric. Explore EVs that fit your life at electricforall.org.
For those with type 2 diabetes or high blood pressure, you may be missing a hidden signal from your kidneys, an SOS for an increased risk of cardiovascular events like heart attack or stroke. The mission? Detect the SOS. Start at detectthesos.com. Learn how a simple UACR urine test can help identify kidney damage early. Talk to your doctor about getting screened. Go to detectthesos.com to learn more about UACR urine testing today. Brought to you by Boehringer Ingelheim Pharmaceuticals, Inc.